Hey everybody, welcome to Our Stock Trades. In this channel, we love to help retail investors go from gambling and losing money to making strategic investments that will generate long-term generational wealth. All right, check this out. So, back on February 5th, around that time, we initiated a price target on Enphase for around $220 when it was trading in the lows of the hundreds. So right now, we are initiating a preemptive sale at around $210-ish. We initiated this in our private group here earlier on at around 6:24 this morning. We're going to go ahead and take a look at it right now in terms of what it's trading at currently. So yeah, we hit the sale up here at around in the pre-market when it was trading in the high 210s. Now it's recently fell, so that was a great call. Now, the question that you may be asking yourself, if we go back to our price target here, to Enphase, we do understand that there is and could be more of a run-up. And in fact, with how the markets have been behaving, it's quite possible that we may extend upwards. But due to the uncertainty of the markets, we're going to go ahead, and I stand by my calculation that we set on February 5th. Now, we're going to go ahead and redo the calculation now for individuals that are long-term believers of Enphase. So we're going to go ahead and do this. So to do this, we want to go ahead and we extracted this from a proprietary technology brain machine, and we brought in the data with inside of Excel so I can present it to you adequately. So if you look at Enphase's revenue from 2009 until 2021, from 2009 and 2016, it's not that much of an increase, right? However, from 2017 and on, something happened within the fundamentals of the business. They started doing more. So we're going to be zooming in on this year from 2017 to 2021, and we're going to go deep into the financials to calculate what is the value of the stock. Now, unfortunately, a lot of investors, when they buy a stock, they don't know how to evaluate it because they don't understand the mathematics. It's actually quite simple. A fifth grader can understand these conceptual algebraic equations. Not even algebra. It's just addition and subtraction, right? With some multiplication and division. So what we got to do here is when we calculate the value of a stock, it'll tell us when to get in and when to get out, because you're finding the value and you're backing it up by fundamentals, not by emotion, which unfortunately plagues the retail community. So once we do that, we're going to go ahead and look at the quarterly, and then we're going to go ahead and finish it off with the yearly, and we're going to plug it into our intrinsic value calculation. So let's go off to the quarterly. When you look at the quarterly, you can see that the free cash flow has been hovering up quarter over quarter. However, we are starting to see it go down. Now, with the whole energy and everything that we are essentially going through right now, this could go up. But as of right now, it is literally on top of our trend line. In fact, if you look at our free cash flow trend line for the annual, it's literally stack on stack with each other. So it is headed in the right direction. But I would say right now, we are initiating this possible preemptive sale, which is a gain of 61%. So congratulations to your 61% for all of our members, right? So now that we're going in here, I want us to take a look at the equity. The stockholders' equity has been trending down. The EPS diluted has been stagnant, and the stock price has obviously soared. So the same thing you can see with the annual. So what we're going to be doing here, we're going to zoom in, and we're going to look at our analysis here, okay? And we're going to take this data that we have, the annual data. We're going to get the average free cash flow, which we already calculated to be around $206 million. So all we have to do now is put 206 here. Now we have to calculate the year. We're going to look at 2017 and on, and we're going to look at this. And 2017, they had 286 million. So 286, 2017, and again, these numbers are in millions. We're going to do annual because 2022 hasn't finished. We have 1382, which is 1.3 billion, 1382. Now they're growing at around 48%. We're going to extend this to 10 years, which then takes the stock to 2032. And again, a stock price is it's discounted cash flows, right? Discounted future statements of all future cash flows backed up by 10 to 15% discount rate. If that doesn't make sense, we do have a course that has been featured on Bloomberg, NASDAQ, Benzinga, and a lot of other reputable news articles. But going back to the content here, we're going to have to do is we have to calculate the numbers of shares outstanding. Now, to do that, it's actually quite simple. All you have to do is to go to our technology here, which is our proprietary tech here. You type in the ticker symbol, and it'll basically give you the outstanding shares. In fact, you can backtrack it to the actual SEC filings. We go directly to the source, and you can see here they have 135 million shares. When you do 135 million, you get a whopping 101 for the recession, 232 for the bear, a 327 for the base, and 496 for the bull. So for all the long-term holders, if you have high conviction in this company, then why not, right? However, I personally think technology is going to definitely overcome with healthcare. So in terms of fund allocation, and again, I'm not your financial advisor. What I'm doing is I'm trying to get a bunch of these energy stocks that we did so good on, that we called back out earlier in the year because we saw the trend based off our sector analysis, rotation, and everything we taught in my 10 years of experience. And I want to plow that into stocks that are extremely even more undervalued, that have a higher percentage of margin of safety, right? So we're going to go ahead and set this preemptive sale earlier, but 230 looks attainable for sure, but we're hovering in a bear market area. And on July, the last week of July, I forget, the 27, 28, we got to look at our economic calendar here. We get our Q2 for GDP to 28, and we're going to see if we're actually in a recession or not. Well, a lot of businesses are actually like for example, Apple, Facebook, a lot of the crypto, holdings, companies, they're all laying off people and hiring, the freezing, they're hiring, and so the economy is getting a little bit tumultuous. So in terms of our price targets, we want to be a little bit more constrictive, right? Because the market can flip at any moment, right? So from this, congratulations to all of our students here. We called this back on, and now you guys are able to enjoy a beautiful, let's go back down here. We calculated the percentage, a beautiful 61% here, and it's really honor and privilege to serve you guys. So if you guys want access to our intrinsic value calculation, our Mastering Stock Market course, there'll be a link down below, as well as our Al Stock Alerts. We have been featured on Bloomberg, NASDAQ, Yahoo Finance, and many other reputable articles because our product works. Again, how much money have you endured, and how much money have you lost in the market going in blind, investing in companies that you don't know about, that you don't even have an understanding of the numbers? You see, when you buy a business, you don't just go in and actually go in there and just swipe up. You have to go in and actually see what is the value of the business? What has the business done in the past 5 years? Does the business have good management? And to do that, you have to ask yourself a set of certain criterias and have a process that is backed by fundamentals and a logical procedural process, not by emotion. Because let's face it, when the stock goes down, you need to confirm with your conviction that says, you know what, I've done the work. I know the value of the stock. Nothing has changed fundamentally. The problem is many retail investors don't have that backing because they don't know how to do it. So that's what we like to teach. That's what we like to preach. And it is a privilege and honor. And I will see you on the next one.